a lot of the countries with strong secular growth, but small economies like Vietnam or Philippines really sold off during COVID. And so we have an opportunity to get some very strong secular growth exposure today at low prices. So for example, I was talking about the Philippines and mall activity. One of the biggest developers and one of the biggest owners of malls in the Philippines is Ayala Land. It has a large land bank, which I think is not reflected in today's stock price at all. What you're able to buy is a stream of cash flow from the malls. Current operating activity, as I said, is back up to pre-2019 levels, but this stock is 40% below where it ended 2019. Mall activity, unlike you see in developed markets and here in the US in particular, mall activity is growing secularly in Asia, right? This is life-centric activity. It is not dominated by retail. 25-30% is retail. Much more of a mall in the Philippines or Vietnam, for that matter, is things like food and beverage. You go play hockey there, you go to church there, you go to the Medi-Clinic, and there's very little street retail activity as competition. We can buy this stock at a 10% cap rate. And so that's the way I would think of valuing a REIT, REIT type of investment. That is far more attractive than you can get in developed markets like the U.S. The interest rate environment in Philippines isn't that much different than the U.S., maybe 100 basis points, 120 higher. But you're getting a cap rate that's probably 400 basis points higher than in the U.S., and it's growing. So we like these opportunities in countries like the Philippines.
Indeed, Ayala Land is down about 13% or so over the past 12 months. So obviously the positive story that you're seeing there, Henri, has not been yet fully reflected or understood by investors. Another country that we were talking about just yesterday on the show was Brazil. And obviously, you know, it's had its political problems, arguably still does have its political problems. But do you feel that the decline in real rates there is something which is starting to give a bit of confidence to the market?
Definitely, right? Real rate in Brazil is still above long-term average and above what we see in many of the rest of emerging markets, with real rates a little bit above 500 basis points. That has kept capital markets activity depressed. So new equity issues, new bond issues have been depressed. So we like stocks that give us some exposure to a declining real interest rate environment and a pickup in capital markets activity like BTG. They're in the investment banking and private equity business. Both of those businesses should do well as rates come down and as inflation in this country comes down.